U.S. Steel down more than 10% since the start of the week, thanks to a big miss in earnings guidance. I'm really pleased to say that joining us around a table here in New York for more is Gordon Johnson, analyst at Vertical Group. He recently cut his rating on U.S. Steel to a sell. Gordon, great to have you with us on a program. Is it really over already?
We think so. Two of the big catalysts that were driving U.S. Steel stock were, number one, the protectionism push since Trump was elected in 2016, and as well as the assumption that we're seeing global coordinated growth. And both of those things are coming under pressure recently.
What does history tell us about tariffs and how these stocks perform?
Great question. So if you look at history, if we go back to George W. Bush's 201 tariffs that went into effect in March of 2002, effectively by August of 2002, he had made 700 exclusions and exemptions for products. The key is the U.S. doesn't make enough steel to cover its steel needs. So if you put tariffs on imports, we think it's going to have a very negative effect on the economy.
Is volume's one thing, the type of steel is another as well. Does the United States produce the right kind of steel that many of these metal-consuming industries actually need?
In short, no. If you look at a lot of the steel mills actually on the West Coast, they import slabs to basically complete their steel process. So if you put tariffs on everything across the board, you're going to have negative effects. And if you go back to Bush's 201 tariffs in 2002, the key issue was not just the lack of steel, but also job losses in the manufacturing sector. So we think there's big negative consequences coming if we have across-the-board tariffs.
So, Gordon, here's a question for you. What could this administration do that would actually get you bullish? Steel in this country?
That's a good question. So if you look at what's happened in the U.S. since the global financial crisis, U.S. steel mills have reduced capacity by a little under 1 million tons. However, in Europe, their steel mills reduced capacity over that same time frame by 14 million tons. The point is this. U.S. steel mills have not been forced to reduce excess capacity. Granite City, the steel mill that's coming back online from U.S. Steel, is one of the least efficient steel mills in the world. It was made, basically constructed right after World War II. We need to take capacity offline to right-size demand. That'll push utilization up structurally and drive profitability for steel mills in the U.S.